Yeah, welcome back from that break. So what we've been talking about previously has been, how these markets began. Then also some highlights of what I'm going to be doing in the coming episodes. So the time has shifted to 10 a.m. for trading dawn, and I think we shall call it, shall give it another name to do with financial markets of the world. So we're going to be looking at African stock markets. So starting with the East African stock markets and the South African stock markets, then the West and North African stock markets, then the far West African markets, then the international markets, depending on their time zones. So I have listed those stock markets based on these countries and their time zones. So you find that these markets open 1 hour between each other, so beginning with the East African time, then South African time, then the Central African time, then the West African time, well, whichever you want to call it. But the time zones, there's 1 hour in between all these markets, and that is how we shall be looking at them, looking at some companies which really stand out, because there are so many that stand out, and shall be looking at some which are really pivotal in these financial markets. And you can buy stock basically from any country that you wish. You want to, whichever country you look at and it attracts you, you can buy stock there. So one thing you should have in mind is these companies give different percentages in dividends. So the one which gives you the highest dividend is the one you can take. Even the one which is most volatile is the one you can also take, so that so that you keep on making money. The goal is to make money. There is no there's no other goal in financial markets. Now, you don't do financial markets because you want to feel proud or clever. You might buy stock worth 50K, and you feel like you own part of an airlines company, and you start feeling proud. But what you own is 50K. Just that. If you make any money off that, it will be 5K or 3K or even just 1K per year. Yeah. So if if that makes you proud, then you'll find a lot of cheering among people who are also proud, people who take such things seriously. But one thing you must take seriously is how much money you make. And that should be very clear. The end goal is to make money in the financial markets. There is no other goal. If you don't have that as your one and only goal, then you're going to lose money. And losing money, I can assure you, it feels very bad. It feels very, very bad. So if you're not going to make money in the financial markets, you're going to lose money. And ways of losing money are, one, making wrong investments. You get your 1 billion, you could have made more money here, instead you went here. Here you're going to make 200 million per year. Here you're making 50 million per year. You shouldn't be happy if you make 50 million. It's still good money. But you could have made more money here. It's just because you didn't have the information. So that should be your goal, to make money, to know where the best companies are that you can invest in. And I've been talking about the evolution of the stock market. So it started in 1602. That was that Dutch East Indian Company. Then to the 1700s, that is the New York Stock Exchange. Then it kept on moving on to the NASDAQ. I'll get you the exact dates. But through all that, you will know where we stand. So 1994, with the New York Stock Exchange, that was buying stock and earning dividends. Now that's the 1700s, the 1800s. That is how stock markets were working. Then the CFD system came about in about 1994. Then 1995, Microsoft made Windows 95, and they started, the evolution of computers started taking place, the evolution of operating systems. Now with these operating systems, that gave birth to the creation of MetaTrader 4. Now MetaTrader made that platform, and now you can trade Forex pairs. So people look at Forex trading, and it is something that is quite, it's outside the realm of normal understanding. Yeah, I don't know if those are the right words to use, but yeah. In order to understand how big the forex market is, you look at how much equity is in the market on a daily basis. Not only that, you look at the bodies that are involved. You see, when you trade stock, you're trading a single company. That is, you're trading shares of a single company. That company is it's just a company, an organization in a country. Now, when you trade forex pairs, you're trading an instrument that has two countries in that instrument. So for the Euro USD, you have the whole of Europe on one side, then you have the whole of America on the other side, and that gives you the Euro USD pair to trade. Now there you're trading two whole countries, and these countries all have stock exchanges. They have, they have too many. There are many things that affect these countries. So you have the stock exchange contributing to this country's economy. You have the military. You have, you have other social organizations. You have other social things like music, like acting. Yeah, all those movie companies, they contribute to the economy of those countries. You have politics. Politicians also, they also contribute to an economy. You have mining companies, you have companies that go into space. When they go and they bring minerals from space and put them in their countries, they become richer, and their charts move. So if you're looking at the, if you're looking at the forex market, you've really evolved. You've evolved from so many things, and evolution is really something we have to take seriously. We shouldn't lag behind, because it doesn't benefit us in any way. Yeah. But one thing that the stock companies will give you will be security for your money. Yeah, you will not make as much loss as you make trading forex. Yeah, that is, forex has proved to be very risky, mainly because of the leverage. If the leverage hadn't been tampered with, then it would be the risk would be very minimal. Yeah, because you'd be trading a 0.01 lot size on a $1,000 account. That is, you'd have about 100,000 pips to your stop loss. That would be very okay. You wouldn't be taking much of a risk. But now you can put a 0.1 lot size on $100, and you have about 10 pips to your stop loss or to your margin call, and that is a very big risk. So looking at the evolution of these financial markets, it started with shares. I started with shares being traded physically, where you'd have to have a certificate to show that you own those shares. Yeah, and I think that's what we're still doing here. When you buy shares somewhere, you need a certificate to show that you actually own these shares. Some document, something to show that you own those shares. Yeah, and by default, you've bought. Yeah, by default you have bought. So once you go and buy shares, it's like clicking buy on MT4. Yeah, that's the whole thing. So you go to the brokers we have, you buy shares and you've bought. Initially, then you wait for the shares to go up. The higher they go, the more money you make. And you have to take some time, watching these shares. But it's a very secure way of trading. And if you fear financial markets, then that's the best way to go. You can learn from there how to move forward. Yeah. So beyond the forex market, now there is the cryptocurrency market. Yeah. Now this one has been the most, it has been the most troublesome market of all time. Simply because the market itself is okay. There's really nothing wrong with it. The market is just fine. But the people around it, the people who take advantage of others using cryptocurrency, those ones, they are the ones who have brought the problem. But cryptocurrency is actually okay. It's a normal currency. It's like having the Ugandan shilling, or the Kenyan shilling, or the dollar, all that. So the cryptocurrency is, it's just okay. There is no risk involved with it. Yeah? The only way you're supposed to benefit from cryptocurrency is by mining. Yeah? Trading and using trading boards and all that stuff. Yeah, that is like increasing your leverage. Now, if you understood what leverage is, then 1-to-1 is mining. And that one is like 0-to-1, because with mining, you don't make a loss. You you can't make a loss. If you're mining Bitcoin or mining Ethereum, I think there are 4 official cryptocurrencies. So if you're mining those ones, then you're perfectly fine. Yeah, there is no problem. But if you go into these crypto boards and whatever, there are many companies that tell you, invest with us and you're going to earn this percentage. Yeah, it's it's all nice, but you've entered the zone of leverage. You've entered that zone where you make more money than normal. Yeah? If you make normal money based on your investment, which by the way is 10% per year. Yeah? If you make 10% per year, that is normal. Yeah? If you start making 500% per year, you've entered the zone of leverage, which means you can also lose 500% in a year. Yeah? That is 5 times beyond your total loss. 10% positive is good, 10% negative is okay. You can recover in the next 2 years. So you can give your trade maybe 10 years. Within 10 years, you'll have got something out of it. Yeah, which is how it's supposed to be done normally. But with leverage, I can open my FOREX account with $100, and by the end of the month, I have $5,000, and I'll be there shouting in everyone's ear, telling them how brilliant I am, because I've made a lot of money. And that happens a lot. And when someone asks, how do you do it? I just fold my hands and tell them, I have things to do. It normally happens with Forex traders. After you make some good money, you become unapproachable. You can't talk to someone. It's, I don't know how this Forex brings this human character out of people, but anyway, that is how the markets have evolved. So where we are now, the latest thing is now crypto. Yeah, crypto is now the latest thing, and people are still struggling to find their way through it. Others are already scared because some people came and promised them some money and they didn't get that money. Now they are scared. They are saying Bitcoin does this to us and whatever. But it's not Bitcoin. It's just the guy who you gave your money to. Yeah, Bitcoin is still okay. Yeah, it's still okay. And people have a lot of trust in Bitcoin. It's becoming, it has become a national currency for some countries, and they have been fighting it. And others who are really scared of it, blocking it from their countries, like China. So that is also happening, because cryptocurrency doesn't really have a base that it stands on. Every currency has a country that it stands on. The Ugandan shilling has Uganda, Kenyan shilling has Kenya, the US dollar has America, the pound has Britain, the euro has Europe. So every currency has its base of strength, of operations, where you can analyze and see that, something terrible is happening in this country, so we're going to have inflation, their rates are going to go down, and all that. But with cryptocurrency, for Bitcoin, you have the blockchain. Yeah? You have the blockchain. It's a very powerful system. Actually, the blockchain is more powerful than Bitcoin. So, yeah, that's something that you need to wrap your head around. The blockchain, very powerful system that is more powerful than Bitcoin. Bitcoin is a byproduct of the blockchain. Bitcoin exists because of the blockchain. The blockchain, doesn't exist because of Bitcoin, but that's how it is. So that brings the question, what about Ethereum? What about Litecoin? What about Ripple? What about, there are so many coins that are out there. Some coins are official, others are not official. Other coins, in Uganda, we have so many coins, wherever they come from. Yeah, I think I'm also about to have my own coin someday. Yeah, I'll call it the Makune coin, something like that. It sounds nice, Makune coin. So I'm selling Makune coins worth this and this and this and this. Then you become rich in Makune coin. And yeah, when you exchange it, you get billions of Ugandan shillings. So that can also happen. There is no real regulation on coins. And yeah, and the rise of Bitcoin just shows you how uninformed so many people in the world are. Because if they had this information, they could easily bring it down. But the lack of information in technology and whatever, yeah, such things just shoot through the roof, and people just stare. Yeah, and instead of controlling it, they just want to own a piece of it. And that's how things normally get out of hand. But yeah, it has happened, and you know the Bitcoin is there. It's still very powerful. Yeah, let me. Yeah, okay, we're going to look at the chart, but you know it is still very powerful. It's still you know very very profitable. Yeah, and yeah, whichever that thing started, even it was less than $1. Yeah, Bitcoin was less than $1. It's in thousands of dollars. It's by far the most it's the most phenomenal currency ever. Yeah, even more than a pound. One coin worth thousands of US dollars. You know, that is something you really need to wrap your mind around. Those people have become very, very rich from doing such things. So, yeah, so that is the history and the evolution of financial markets. All that stuff is within financial markets. You know, you have stock currencies. I think basically that. So I said all that stuff, yet they're just two things, stock and currency. So it's very, very simple. So we're going to take a short break, and when we return, we're going to be looking at what we normally do on Trading Dawn. It's going to be technical analysis and fundamental analysis. So let's take a break, and we shall be right back.